All right, let's talk about something that can be a real headache for business owners. Fixing your sales tax in QuickBooks Online. But don't worry, by the end of this quick guide, you're going to have two super clear ways to solve it. Let's jump right in. So you're staring at your sales tax center, you're looking at your reports, and the numbers, they just don't make sense. You know what you should owe, but QuickBooks is telling you something completely different. I know, it's incredibly frustrating, but believe me, you are definitely not alone on this one. Here's the good news. This is probably one of the most common issues people run into, and there is a very clear, logical fix for it. I promise, by the time we're done here, you'll know exactly what to do to get your books straightened out. Okay, before we get to the fix, let's just be crystal clear on what we're talking about. Your sales tax liability, that's just the money you've collected from your customers for the government. Your job is to hang on to it and then pass it along. The headache really starts when QuickBooks thinks you're holding a different amount than you actually are. So how did we even get here? You know, the first step to fixing any problem is figuring out why it happened in the first place. So let's take a look at the usual suspects for why your sales tax numbers might be a little off. Chances are your issue is going to fall into one of these three buckets. Maybe you moved your data from an old QuickBooks desktop file and, things got a little jumbled in the transfer. Or maybe a manual journal entry was made that accidentally threw the balance off. Or, and this is a big one, you just plain forgot to charge sales tax on a few sales. And this scenario just perfectly nails that third point. Just think about it. You're at a busy street fair, taking cash sales. It's so easy to forget to add that extra 5% or 7% on top. But guess what? The government still wants its money. And that means the business now owes tax it never actually collected. That is a classic reason you'd need to make an adjustment. All right, let's get to the good part. The solution. There are two very different ways you can fix this in QuickBooks, and which path you take depends completely on your situation. This is it. This is the single most important question you have to answer right now. Can you actually go back to your customer and ask them to pay the sales tax you forgot to charge? Your answer, a simple yes or no, is going to determine everything we do next. Now this is the whole shebang right here. It lays out your options perfectly. If you can't collect the tax, like those anonymous customers at the street fair, you're going to go with path one. Your business has to absorb that cost, and you'll make an adjustment right on your sales tax return. But if you can collect the tax, say from a regular client, then you'll use path two to create a special invoice just for that missing tax. Okay, let's walk through path one. This is the one you use when your business has to take the financial hit because, well, you just can't go back to the customer. We're going to adjust the liability directly. The process inside QuickBooks is actually pretty simple. You just head over to Prepare Your Return, find the exact tax line you need to fix, and click Adjust. From there, you just tell QuickBooks how much to adjust it by, and this is the important part. Which account is going to take the hit for that change? So let's talk about this adjustment account, because it's really the key. When you have to pay sales tax you never collected, that money has to come from somewhere, right? By choosing your sales account, you're basically telling QuickBooks, hey, reduce my total revenue by this amount because I have to use some of that money to pay this tax. It's the right way to do it because it correctly shows you actually earned less than you thought on those sales. All right, on to path two. This is what you do when you can go back and bill your customer for that missing tax. And it's a really clever trick to get around a specific limitation in QuickBooks. So, you'd think you could just send an invoice for, say, $5 of tax, right? Nope. QuickBooks is built to calculate tax based on a product or a service line item. It just won't let you create an invoice that is only for sales tax, and that's exactly why we need this little workaround. Now, this is a little one-time setup that you can then use forever. You're basically creating a special bundle item. The real magic is in step 3. The bundle has one positive and one negative of the exact same item. They're designed to perfectly cancel each other out. You'll see what I mean in a second. And here it is in action. It's so clever. On your invoice, that first line is for the original sale amount, and you mark it as taxable. Boom, it calculates the $5 in tax. The second line is for the exact same amount, but as a negative number, and you mark this one as non-taxable. So the positive 100 and the negative 100 cancel each other out. The subtotal is 0, but that $5 in tax from the first line, it's still there. The total amount due is now only the sales tax. It's a fantastic solution, isn't it? So we've walked through both paths. Let's just do a final, super quick summary to make sure you feel totally confident about which one to choose when you run into this. And here it is, boiled down to the absolute basics. You can't get the money from your customer, then your business pays, and you use the adjust on return. Simple.
You can get the money from the customer, then the customer pays, and you use that slick tax-only invoice trick. That's really all you need to remember.
And that pretty much wraps it up. You now have the tools you need to fix any sales tax errors from the past. But, the real power comes from making sure it doesn't happen again. So the question I want to leave you with is this. Now that you see how this can happen, what's one small change you can make in your daily process to make sure your sales tax is right every single time?